What's going on, guys? Welcome on in. Happy Wednesday. Happy FOMC day. We are live. And we just got the Fed, I guess, decision of nothing. And just really the catalyst, the market reaction. And so, as we speak, I have DraftKings pulled up just because I had an alert go off on this stock. I think we must have charted this out. If I didn't do it live, then I must have done it on the weekend or something. But I charted out the break over 45.60-ish. We got that, and it looks like we're getting a high volume day, so we'll see what happens, see how this closes. This could be a good trade idea for those who may be of interest. Personally, not something that I can really do unless I want to play it in my Robinhood account. Could do it, but I probably won't. So we'll see how it goes. Either way, it looks like it's setting up nicely. We got gold looking really good. Gold breaking the downtrend, actually very good on gold, by the way. Breaking the downtrend and sending itself to the upside. You've got silver up 2.6. That just made a new high of the past couple of weeks. You've got Bitcoin up 5.5%. Obviously, it is down the past couple of days, but it's coming back a little bit. Oil's down a little bit. What's going on, Millen? We have the S&P is up. That is breaking out. This is a nice trade. This is something that I would highly be interested in. Here's the thing, kind of pissing me off a little bit. So the prop firm that I've been using, because I've been in profit on their account, I am deemed less important as they've been transitioning platforms. So my account, because it was in profit, has been less, because they want to get people who are going to lose money first in to buy more, right? Which, it's just kind of the nature of it. So it is what it is. But I actually found another one. There's other stuff that I'm thinking about. Another prop firm that I looked at that just also recently launched. We're kind of testing the waters at some of this new stuff here. That is stocks only. So I'm like, oh, that's kind of cool. Might try that. But either way, I do have some skin in the game on this. Not big, not a position size that I would like, but I have some skin in the game on one of my accounts. Would have liked it on the larger account, but it is what it is. We have some skin in the game. I like the breakout we have setting up and ongoing right now on that. NASDAQ is going nice. This is looking good too. The Dow is busting to the upside. DIA versus future. Yeah, here's DIA. That looks really good. That could be a trade to the upside as well. The 10-year is coming down. Well, no, it was funny. The 10-year reaction so far was interesting. It was initially down, then up, and then it's right back to where it kind of was. So not much reaction there yet. Want to look for follow through on that. But otherwise, looking good. So what's going on? I hope everyone's doing well here. XLF closed new highs. Let's take a look. I honestly, dude, I wouldn't be shorting. I really wouldn't. I mean, yes. Like, it's up, and you can think, okay, the contrarian inside of you says, yes, short, and it's up a lot, which I mean, I understand that. My concern is, like, this is so strong as of late. So you are fighting that, which eventually will happen at some point, but you're playing the guessing game of the top, and who knows, you know what I mean? But that is a beast. That's also coming right up into its prior all-time high, so that's pretty impressive. Hedge is blown out. Dude, I mean, it's kind of crazy, but if you think about it, like, and there's no, like, I'm not gonna say that look at me, I'm so smart, I haven't hedged. I haven't hedged, and like, it's just luck, I guess, because like all the criteria for me to hedge was met, and it has kind of been met the past couple of weeks. I just decided not to do it in my portfolio, and my plan was to just slowly sell out of longs, which I've been doing. So I guess that's my hedge, if you want to say it. I was hedging, but like I'm getting lucky that we haven't gone down. You know what I mean? Like in that sense, if you need to be. So that's cool, I guess. But in hedge is a hedge though. XBI, not as impressive chart wise compared to other stuff. Now, I think what's more interesting, though, is the individual stocks and individual looks that we're going to be getting. So I talked about DraftKings. That one is good. I like that. Now, is that with the NCAA tournament coming up, I mean, I don't know. Does that matter? Probably not. Usually that stuff is like priced in well ahead of time. Either way, though, the stock is up, which is cool. Amazon's still kind of in its consolidation. You know, it's kind of got a little bit of a wedge going on here, which at some point, you know, I would suspect will break and have a decent move. The question is, like, you know, what is it going to be? And it's not as clean of a wedge as I really liked. So I don't really care for that one. Enphase up nicely today. Caterpillar's new all-time highs, I believe, right? Yeah, it just keeps going to new all-time highs. The thing's a beast. Home Depot, that's looking really strong as well there. Meta's up 2%. mRNA was down. Now it's coming back. Microsoft, this does look really good as well. All Microsoft, looking back, now you look back and say, yeah, man, look at this. We really just broke out a couple days ago, retested it, and then now it's pushing back up. I would suspect if this market stays strong, I would suspect Microsoft's going to go for a new high here very shortly. It looks very, very strong. I'm not going to trade it because I missed it, but I mean, would have missed. Just the chart's a little weird. I don't really want to trade that. Doesn't really look A+ to me, but you know, looks strong is what we should say. You could make the argument that you've got a breakout looming on Netflix coming up. You can say 4-hour little highs. You got the 1-hour chart highs as well. You got a breakout over 628, 627, upper 627, 628 is looming. That's coming. It seems like it's coming. NVIDIA's been just chopping the past couple of weeks, really, past couple of sessions at least. So nothing crazy there, but I mean, same thing. This is a scary stock to be looking to short because it can snap up quickly if the market stays strong. The question is it going to stay strong? Is this going to unwind overnight? It totally could. It totally could. Tesla trying to get back over its breakdown point, so it's trying to regain some strength. And yeah, that's that. We can go to the risk on stocks next, but I think I want to pull up these guys, Bitcoin, gold, and silver really quick. Bitcoin, I mean, I'm not really interested in trading that right now. The chart doesn't look great. Gold, I mean, beautiful. I have a small position on gold as well. Again, these are two positions that essentially what happened was because I was up on my account, they have yet still, you know, they said on Sunday that they would have it in 24 hours. It has yet to happen. Transition my account to the new platform and stuff has yet to occur. But I had an additional account that I was testing a trade copier with. And so that account got transitioned, but that's a smaller one. So I'm in the game, some skin in the game on gold and on the S&P futures, but small. If those targets hit, cool. And that's it. You know, they will be good trades, but won't be on the main account that I've been working on, which is okay because there's a million trades to be had the rest of the year. As long as things, you know, go accordingly, you know, it's okay. But it does piss me off. That is for sure. I see a shit ton of green though. Look at this. Look at this green on the risk on list. I mean, and big numbers, not just a few percent. Big numbers. So risk on, a firm up massive, up nearly 10%. AI, I don't know. I don't want to follow that one too close. ARK's up 3.45. That's pretty big. That's a big move. BYND is up about 3%. Okay, cool. Coinbase is up nearly 10%. That's big. DraftKings, we talked about before. That looks really good. I like the look there. I would say worth a trade to me. Worth a shot to you. I mean, if you trade the same way as me. But worth a trade to me. That's how I view it. On the weekly time frame as well. I mean, this is just a beautiful setup. Now, would I, if I played this, right? Shares, options. If you play options, I haven't traded options in a long time, but if I did, you know, I would go out a few weeks to a few months, maybe 2 months out, and that's how I'd play it. Shares would be shares, and, you know, stop loss would be underneath this weekly low, which would be around $42 is your stop, and then take profit looking at 50 plus would be my thoughts on that. Is how I would see it. Which would be not a perfect 2-to-1, but it would be better than a 1-to-1, and then you can kind of scale from there if needed. That's how I would play it. GameStop. Why don't I pull up games? They have earnings coming up. That's interesting. Palantir. Just in some consolidation. Roblox. Big bounce, but it got crushed a couple days ago, so it's just recovering some of that. Rivian, super weak still. And it's up today, but it's just generally this chart's really bad overall. Roku, similar deal, pretty weak chart. I have actually an alert for the short setup that breaks down. Shopify, that's better. It's been consolidating for a while though, so it hasn't really done a lot, but that's better. Much stronger. Snap, not very strong after the earnings recently. Snow got destroyed after its earnings, and so it's trying to come back. This does look like a decent reversal signal, but I don't trade that way, so I don't know. But it could be a good dip buy, maybe. For someone maybe who trades that way. SoFi, yeah, I'm not really that interested in that. Block, okay, nothing there that I would be interested in. All right, so we got the gist. I mean, that's a pretty decent gist. We can go through some other lists that I have, but of large caps, in a second. But yeah, pretty good. KRE is crushing that today. It's up 3.38. That's the regional banking ETF, which is nuts. That's doing pretty well. Rising wedge invalidated, yeah. Use SH shares isn't a bad loss. No, that's not bad. Yeah, that's not like super crazy. But I mean, look at that breakdown you got there. Honestly, like when I think about like, I always come back to some of these leverage ETFs or these ETFs sometimes, and I say to myself, man, like it really, like the short on these leverage ETFs instead of the long on like the S&P, it seems like a better play sometimes, because you get the decay and the opposite move of what's happening. Mara calls are printing. Mara looks, well, yeah, I mean, Coinbase is crushing, so Mara I would imagine is crushing. Yeah, that's bouncing nicely, building a nice higher low, we would suspect here off the recent lows. That looks pretty good. I mean, we just hit a new high on the S&P right there, so just now it's not up like a nutty amount, but it's up nice. It's up nice. So the trade for me though, I did not get like the initial break of this blue line, but let's see. Shit on my freaking keyboard. No, but I got somewhere in here. Like I didn't get that close, but stop loss is here. Stop loss is under the lows of today, pretty much. Not pretty much, it is. Gold just got an alert going off on gold as I speak. Oh, you know what that is? That's this. I had an alert go off when gold broke above these highs. So, dude, gold looks, it's technically not hitting a new all-time high. It's close because there's this upper wick, but with the break of the downtrend and now pushing up on these highs, gold looks super good. It looks super good. Curious how nice of a move we're going to get. I had I have a silver position in my portfolio, which I haven't sold covered calls on in a while. Have I? No, let me just double check. Oh, should I have? I have. But it's out for next Friday, the 28th. Is that the 28th? I think it's the 28th. Next Friday, the 25.50 on SLV. How close are we to that? We still got $2 more to go, so we're totally good there. We're fine. We'd have to go up to here to take me out, which it could happen. I mean, it'd be awesome if it happens. I'd love to get out. I mean, I'd love to get out because that means I'd be up a lot on the position. And then it would just, be my additional way of scaling out of that portfolio like I've been wanting to do. Instead of buying a hedge, I've just been scaling out of the positions I've had in there. But yeah, we're all out of margin and all that stuff, which we've been for a little bit. So that's good. That's just kind of my way of hedging, instead of actually putting on a hedge. And that's just been my choice. And it's kind of worked. I think it's kind of luck that I didn't hedge and it just had, but whatever, it is what it is. I haven't been that focused on that portfolio, to be honest, because we're up so much. I don't care. Like I do care, but I also don't. Like we're up. It's not interesting. It's more interesting in thinking about what you'd want to be kind of where you want to be putting your money when we're coming down and when we're like, holy shit, things are terrible and, market's crashing and whatever, because then it's like, okay, if I'm strategic here, I can start buying dips and then, in the next couple of years, hopefully we have a nice return on these dip buys. But yeah, if you're just looking at it from like a DCA approach, but my suspicion though, is that, now we can start looking at these there'll be other charts that start setting up. So, well, the S&P and gold are my two, like, whoa, those look good. DraftKings is there as well. I would suspect that you're going to start seeing that. DraftKings looks really good too. That's awesome. This also, we got 30 minutes to go, and your volume's already the highest it's been pretty much almost past month. So you are looking really good on that break. I like that a lot. And 50 plus will be the looks there. And so... but yeah, it was so boring, I feel like, for a while, and then you get a day like this where it's like, holy shit, you got to kind of take your pick of where you want to be, and so there's three picks in my view. Now you could have played the Dow as well. I think at least I could have played the Dow. That's my thoughts. You could have played the Dow on the breakout here. Problem is the Dow just has more of this, like, my experience with the Dow is a lot more chop. Now, it's not like I have done bad on it, but it's been slower and choppier versus playing the S&P. I just have a better feeling that either we're going to stop out or we're going to hit take profit, faster and maybe by the end of the week. Because it's Wednesday. I think those swings could hit by Friday. So we'll see, unless we get a massive move tomorrow, which I don't know if we should really expect. But if that follow through comes, cool. But we're going to hopefully know by Friday. So far, the move looks good. It's 30 minutes to go. We do look really strong. I mean, we're hitting new highs as we speak, so we do look really strong. So that's a good thing if you're long or you're looking to get long. Does it mean that we're going to follow through overnight? Nope. Doesn't mean shit. Now, tomorrow, jobless claims. Yes, I'm sure it will matter, but how much does it really matter? I don't know. A couple other things coming out in the morning as well. Powell takes part in a Fed Listens event. Again, Powell today, we can go through some of his commentary. Like right now, we can actually go through it because might as well. But I don't know how much we really should be thinking that what he says on Friday would matter if he didn't say much today. Because he's just, I don't know what that event really is. You can look deeper into that, but I don't really suspect it's going to be a big deal. My thoughts. So we can go back to the top and just kind of get a sense for this. Powell said our policy rate is likely at its peak. That was at 2:36 Eastern. So that was like an hour ago. Market's done pretty well since then, I would suspect. Well, it has. If you just jump over the 5-minute chart on SPY. Where's 2:36? Damn, yeah. That's like this candle right here. This big green one. Yeah. Yeah. So that's, there you go. Powell appropriate to begin easing at some point this year, which I feel like we've said before. Policy rate is peak. So they pretty much just said that we peaked and that they're likely to cut rates at some point this year, which is what we kind of know. Market's been pricing that in, and they didn't do anything on the balance sheet. There's an appropriate slow pace of asset runoff fairly soon. Making good progress on reducing inflation. Inflation data came in a little bit higher than expected, but again, like we said, is it that big of a deal? Expect to see goods prices going down less quickly. Can approach questions carefully and let data speak. Which is kind of the nature of how this kind of goes. Like data, we get the data beforehand anyway. If there was a significant weakening in the labor market, that would be a reason to start rate cuts. So that's what we're kind of now. That's just what it seems like the eyes are on. If all of a sudden, next couple jobless claims reports come in really high, and we're like, oh, that's a little bit higher than we thought. Oh shit, then it's like, okay, now the eyes are like, okay, what meeting are they going to cut? And then when we can get more clarity on that, not super surprising. Instinct would be rates won't return to very low levels, but what is very low? So, yeah, I mean, that's a general gist of that ends the press conference. He ended it like a bit ago, but not a lot. I mean, not a ton of stuff, that came out of that. But is it super surprising? Not really, because it's kind of just, I feel like we're kind of just quiet on that front. Like, it's data dependent and yada, yada, yada. Yeah, cool. Hood coming up. Hood's doing well. Yeah, this one has been good. Now, the thing is with Robinhood, this is a good sign because, this is not surprising if you think about this, right? Like we were talking about a couple of weeks ago or a couple of days ago, last we talked about Robinhood. You have crypto, you have stocks. When the markets of both are at all-time highs, Robinhood is probably going to be up because you've got more trading volumes, more users in the platform. They're making more money through fees, more people signing up for Robinhood Gold, more people going on margin and doing dumb shit. Like, they're making more money when people are using their platform more. When things are quiet and we're in a bear market and everyone's like, oh shit, the market sucks, I don't want to trade. Yeah, they're not going to do great. And that's what really we kind of have seen. So they're doing pretty good. Now, of course, not nearly where they were when they began trading back many moons ago, a couple years ago, 3 years ago. But almost 3 years ago, I guess. But yeah, that's looking pretty strong. It does look good. Got the margin count set up so I can swing trade on Webull. Oh, there we go. There you go. Swing is nicer. Yeah, that's from. I mean, that's what the video I posted yesterday was essentially like going over all my thoughts behind that. I love the way that swing trading has been. Not that I have never done. I obviously used to only swing trade small caps back in the day, but not through chart patterns necessarily. It kind of was, but it was more so like just buying bottom charts, was what I was doing. And then I would sit on those for a couple of weeks until it spiked, and then it would spike or it would not, and I would just get out eventually, and it would work out kind of well. But swings now are just based off of breakouts on bigger time frames, and that's really what it comes down to. And I think it's just so much cleaner. So like you can look at it as a 4 hour. Now I don't very often play these, but you perked up above that level, which you can say is a break. So bigger picture charts here, like gold swing, stops under here. You could even put stops under here if you really want to make it tight, with targets to 1.5 to 1 or better. Ideally, risk reward is what I would be looking at. But I mean, same thing with the S&P futures. Getting on this, like when I get on this, like I don't know how long it's going to take, but because I'm in futures, I don't really care. I put a stop here and I put a target wherever I put my target, 53.50. I don't know. As I say, that's where my target is. I think it's somewhere up near there, and it takes whatever it takes to get there, and whatever happens, and so we're gonna grind up or we're gonna grind down, and it may happen tomorrow or it may happen on Monday or Tuesday or Wednesday next week, for all we know, right? Maybe it just does this, and then it stops me out or it hits take profit. Who knows? But it's just cleaner now, depending upon how you're doing it. There could be some fees associated. There could be margin. There could be shorting fees. There could be swap fees if you're going the prop firm and you're using playing stocks. Like there could be some fees associated. It depends upon what you're doing. But either way, I just prefer the moves. They're just nicer. They're cleaner. I don't know where that would be. Maybe it's on TD Ameritrade, but the problem is the fees there I think are a little bit high. Maybe that has changed. I haven't looked. I guess it's Schwab. Sorry. But we need a one-stop shop. And there definitely are out there. But when I say one-stop shop, I mean in the future, post-prop firm days, like once I officially stop using them, which will inevitably happen at some point, my thought is we need a platform, or I want to find a platform where I could trade pretty much any futures contract I want and any stock that I want on the same platform, so I don't have to have two accounts. That would be perfect, so that I can keep my trades, and then and then it's in one place. And ideally, have that platform be connected to TradingView, so I can do all of that on the TradingView charts. That is what I want. I don't know if that exists right now. I haven't done enough research into that. I know that there are platforms out there that have some of that, or at least have a lot of that. But then there's fees, and then, it's like, why would I go to trade with, at least in the past, why would I trade futures on TD Ameritrade when their fees are so much higher? The commissions are higher than somewhere else. So then there was like, I should probably go somewhere else for that. So then you end up swapping accounts, and you have 2, 3, 4 accounts to do different things. It's like, I don't want that. I want one place. And I would imagine Webull is going to have that at some point, as in like have futures and have the ability to do that. But hopefully that's something that's coming soon. I would think that that's on the radar for a lot of these companies, because that's what people would want. But it's also not that complicated to just, like, especially with TradingView, go down to the trading panel, logging in to an account, easily logging out and logging into your other account to go back and forth. It's not that hard. As long as they connect to TradingView, that's what it's all about. Because I don't have to leave this. I could keep myself on this screen and not have to leave, which is ideal. Right? Draw my freaking lines and targets, and then say, okay, enter it, let's go, and that's it. That's what we would like. How's Drafties doing here? Yeah, super strong. 20 minutes to go, roughly 19 minutes to go until the close. But shit looks strong. That's what we got. Anything else to be done in the port? Not really. It's a 5% day in the portfolio, which it's funny because I still have TMF in there, and a decent amount of it, which is a leveraged playoff TLT. That's just a massive doji there. Maybe that's signaling a reversal. I don't know. I'm not gonna get too deep in that, but that's a massive doji there, which is, the 10-year is pretty much, well, the 10-year is down about a half percent today. So it hit the same exact spot that it hit back at the end of February, and so far it's rolling over. So far, it hasn't, really rolled over yet, under like 4.2, and we can talk, but so far that's looking like a rejection. I have a 5% left of my BITO position that I bought a while back. That is currently up massively, up well over 100%. But I'm going to get rid of this. Like, we go to a new high on this 35 plus and I'm out of it. And then I will just hold my remaining Bitcoin position that I have. But yeah, there's not much to do there. Not much to do there, really. I have ARK. I guess I could sell a covered call on ARK out to like next week. I could, with the strength we're getting right now. But I prefer to sell a covered call once we break over here, if we do. You're gonna get better price for that and less chance of getting taken out if you want to stay in. So nothing to do. There's nothing to do there. It's important. Neo, how bad has that been doing lately? Let's see. This has been the ultimate. Oh yeah, she's getting crushed. Well, it doesn't look good, I'll tell you that. Let's let the volume profile load up here for a sec. Give it a second. Does not look great. Oh, you know what's cool? I didn't notice this. Underneath, let me get myself off the screen for a second. Underneath this, in the bottom right, see where it says, like, there's the price, there's this little news bar, and then there's key stats. Next, I think this is new. Next earnings report is in 70 days. That is new because I don't think that they had a timer on that before. That's new. That's cool. Because it's always good instead of having to like go and like on the bottom of the screen and look. As you approach, I gotta fix this volume profile, by the way. As you approach this area right here, you're gonna have a lot more interest, which is down around $4. Crazy that might sound. Yeah. You got to go out pretty far, and then you can get down towards like $4, and it's not super clean though. I mean, you have a gap to fill to about what you kind of already filled to about 475, and then down towards 4, there's a lot more there is some resistance there at 4 and more of a consolidation. So that's an area of more of an interest at 4, I would say. But yeah, she does not look good. Doesn't look good in general. I wouldn't short it at this point in time, but I definitely would probably just, if I mean, I just no interest in it right now. Such a strong downtrend. The problem is, like, a stock that's so weak in a bigger picture. Now, of course, it's a Chinese company, different game, I guess, over there. But stock that's so weak in a very strong market, definitely not really interested in that. Personally, mRNA kind of got me thinking. Now, it's not how I trade, but this area right here is kind of your zone. I'll leave that on the chart because that's kind of the spot. Again, market's strong, so would I, was that something that you would just like blindly short? No, but if it can't get above like the 115 area, 16, like that 115 zone, that's a really good area to kind of like leave as your risk, on if you were to short it. Struggling to get back up there, and that was a prior area of support, so I think that's a pretty good one to have on your radar. If you look at mRNA, XRT crushing it today. That looks really good, breaking out to the upside. That's retail ETF. XLU, that's been a weaker sector generally. not as strong. XLV healthcare, not doing great today. Real estate, you can make, well, this, if the rates come down, this will probably do well. XLP, XLI, industrials. That is nuts. That is a super strong place. Remember this? I remember this from a while back too. I'm pretty sure I played it long. I think I made money on it. I think. Maybe I traded it once or twice. First time stopped me out. Second time I got back in and made money. But just in general, right, this has been huge in terms of the strength it's seen. My gosh. Killer move to the upside. Talked about carry and XLF before. XBI, you know, just doing its thing. It's kind of retested the breakout point. See if it can bounce off that. Jets is up 3%. Damn. It's almost going to a new high of the rally. I'm curious how semis will do in if this rally is sustained. Will they be super strong? Will they be weak? They've been strong, so will they continue to be strong? But yeah, you see a lot more strength in IWM. So the Russell, ARC, like those types of stocks, the risk on stuff, that is doing really well today. The Dussel gang, yes. Those were the days. Not that long ago too. DUSL, a 3x ETF off XLI. Crazy. Oh wow, look at the dollar. Damn, the dollar is coming out. That's probably why gold and silver are crushing it today. The dollar's down a good bit. It was up earlier today, and then it just got hammered after, I guess, Powell hammered it. I don't like I don't like to think about, to be honest, either. I don't like thinking about, oh, like, what's the reasoning why? Oh, I don't care. Like, I really don't. I really don't care. You can say whatever you want. It doesn't really matter, because whatever your theory for the market is could be invalidated tomorrow. So in my view, it's charts and it's price action, and that's it. And what all this was a catalyst, a very large catalyst, sure. But it was a catalyst. Just like, you know, tomorrow's jobs data, jobless claims, is another catalyst. Smaller than today, but it's still a catalyst. And there's some other small catalysts as well. That's all it is, you know. And then if that's moves things, great. As long as you're aware of the catalyst and you know when they are coming, and you're not trading prior or at the time of the catalyst, because you can get some crazy action waiting for the catalyst to pass through and then doing something. Great. Now you don't have that news risk and that headline risk. But who cares? Like, in my view now, who cares what ends up happening? You just trade the way, or you just do what you do with whatever happens. If the market goes down, what do? Oh, fuck. Like, maybe this is, well, not. There likely will be good short setups. So you take advantage if you can. You can make money. If you don't, you don't. It's what it is. Sometimes you don't. And when the market goes down in your investment portfolio, you're sitting there saying, what do I do? Well, what happens when the market goes down? Do I buy? Do I sell? Probably you want to be looking at buying. And if you have cash available, you want to deploy some sort of dollar cost average approach or strategy and buy into stuff that you want to hold long term. It's really straightforward. It's simple. And all you're looking at is just things happen that are catalysts for you to then act. And they move things so that you can make a move based off strategies that you have in place. Simple as that. I try to keep it as simple as possible. So with that said, 4-hour chart on SPY, little upper wick there, We'll see how we close. We got 10 minutes to go. We'll see how we close. 9 minutes. Yeah. I would imagine volume is going to be really good today across the board compared to the past couple of days. By the time we close down shop for the day, today was a double duty day for me. We had two, they're already done, but 2 workouts. We had a lift and we had a 5-mile run. Feeling tired? Not, I feel actually pretty good, to be honest. I feel pretty good. When the sun is out and it's warming up and you get outside in that for a run, there's just nothing more euphoric than that. So I feel good. But I'm sure I'm going to sleep really good tonight. That is for sure. 58 miles ain't going to run itself. I'm now under 2 months out from the toughest challenge of my entire life, essentially. Not essentially, it is. Not even close. There's nothing I can probably compare it to ever that I've done up until now. Or until then. So, profit taking in today, yeah, wouldn't be surprised. But that we'll leave SPY up for now, I think. And yeah, other than that, though, we kind of covered a lot of good stuff. You know, gold's doing well, silver's doing well, Bitcoin's up 6.5% now. It's been kind of climbing itself back up. Everything looks good. Now the question is, do we get the follow through? That is the question of the day, the night, the week. You know, because it's we haven't got a lot of that lately, but when you go through periods of not getting that, eventually you do get it. And when you do get it, it could be pretty good. So that's what we wait for. So that's what I like about, you know, making sure you're there's no reason to be freaking out about things, right? And you can make it as stressful as you want on yourself. But the longer things consolidate, the more interested you probably start to become, because okay, like when this consolidation breaks, we can get some decent moves, because markets go through trending and consolidating, consistently back and forth, right? So the longer we're trending for a while, a long time. Okay, look back. Okay, we haven't trended this long in a while. You know, each day that we keep going up or down in that trend direction, the closer you probably get to that trend eventually stalling out, and either a pullback of the trend or a consolidation of trend, and then price not really moving a ton. So the longer, and then same thing on the other side. All probabilities, right? There's no way to know for sure tomorrow is going to be down, up, or trending, not trending. But based off history, based on what we can see, there's a higher chance, right, that we are going to trend now after consolidating for a while. And the consolidation really wasn't that bad. You can even say on the higher time frames, we've never really stopped the trend. The trend never really stopped. On the shorter time frames, we've kind of slowed down the trend. We have been super freaking strong on the weekly time frame, though. That's insane. I can probably get rid of some of these lines too, because it's like, you know, how necessary is this? But to leave on there, we're just kind of mapping the general trajectory of what we were getting recently. Check back to gold here. It looks very similar to the S&P chart. Very similar to the S&P chart, to be honest with you. Since the and so it's funny, think about this right now. Obviously, if you had shorted the initial reaction, this is gold. So I'm gonna go to the S&P futures. If you had shorted, I'll go to SPY to make it easier to view. If you had shorted the initial reaction, right? So you wait for the initial reaction and then do the opposite, right? So if you had shorted somewhere up in here, yes, you would have been green. Like you would have had opportunity to get out of your short at some point. However, what's today is a good example of, well, we had this kind of range earlier in the day. That was here. We get the initial announcement that the Fed comes out with at 2 p.m. Eastern, and it's like, well, are we going to hike or no hike? They say, you know, rates are remaining the same, yada, yada, yada. That statement comes out, market goes up. How many times in the FOMC have we gotten a massive reversal the complete other way, or bigger moves? We've gotten a lot. But this time, went up, pulled back a bit, but did not go to a new low of the day. Actually, pretty much came back to just north of where we were before the announcement came out, so still above where we were at the announcement time, and then trends up as Powell speaks. Kind of funny how that works, right? So sometimes you get these big moves where we get these up and down, and it's like huge, you know, volatility, and you know the first move is wrong. Technically, you could say like you could have made money on the short if you were scalping, like if you had shorted this. Yes, I'm sure someone did, but technically we kind of picked a direction and ran with it. Not perfect, but on the 5 minute. But yeah, generally we went up after the announcement, which is not super common, at least over the past like year or two of my recollection of these FOMC days, because it's usually the first move is the wrong move, or there's some fuckery. It's up and then it's down to a new low of the day, then it's up, or it's up and then down, or it's down first and then up the rest of the day. But we didn't really get that. We kind of just got up, little pullback, just back testing the move and then sending it up higher, which could say that's healthy, could say that's good, could say it's amazing, could say it's bad. You can say whatever you want, but that's what happened. Yes, that's that. 10 years down 0.5%, nothing crazy there. Silver is shiny, that is for sure. It's nice and shiny right now. New high of the highest silver has been since December of 23 when I had that spike, but it's at the top of the range. So silver is at an interesting spot because it has not been up here in a while. It's getting towards $26, which this is the top of the range. This is the top of silver's range. Now, if you've seen us chart this out before, you know that I've looked at this a lot and I said to myself, this chart gets the juices flowing, at least to me, because it has the look. It has the look that if we can break, through here and push up into the upper 20s, and dare we say $30. I mean, I don't see why we can't make a run, and a big one. And this is on a 1 month chart. So each of these candlesticks is 1 month. So we're talking like this is not about, next week. So this is like, honestly, like we're talking like into the end of the year and into next year. But like, this is my question. And has the looks, could do it. Is the path going to be clean? And we're going to find out. Maybe not. But same thing, it's been consolidating and it hasn't really moved a lot lately. So my eyes are looking at silver and they're like, you could do it. You could do it. Powell's very dovish today. Seems like it, which is more supportive of this, of like our Trueflation. If you were to go to trueflation.com and see like their numbers for inflation, and they kind of have this view of like, here's the current inflation rate based off their numbers and their projections, and Fed's reporting 3.2, but we're actually a lot lower in terms of what we're actually feeling and realizing right now in the U.S. And this number was higher than what the Fed was reporting back at the peak of the inflation cycle, back way back. So, yep. How we finish in the day here? Market just closed, 4 p.m. And S&P shot up just shy of the high. So very nice. Strong last couple minutes there. Pulled back a little bit into the close, then sending it into the end of the day. So like I said, I have a small position on this. I'm waiting on my main account that I've been trading. Hopefully I get that by the end of the week, and so we're good next week. But in the meantime, I have small positions on the S&P long with a stop loss under today's low. So it's a swing trade, and so targets are decently higher. And then I have a small position on gold as well. Stop loss under today's low, gold is a different setup altogether. Not really a setup. It's a similar setup, but it's a different stop loss. Stop loss on gold is actually underneath here, and targets are at least 1.5x higher than the stop loss, at least across both of those. But again, those are pretty small. I'm going to connect all my accounts now to TradeZella. Not all mine. Now that I've traded on now a second one. The plan is that I'm going to connect a trade copier. So it will just copy the trades, and it will take the normal size and then make it smaller if the account's smaller. And if I have a larger account, it'll make it larger to the proportion, or to the, like if I'm trading on a 25K account and then I have a 50K account, Well, then on the 50K account, I'll have the copier just 2x the size on the 25K, right? And then same thing on the other side if it was lower. So that's the plan with the copier. So maybe some small kinks to work out, and there won't be a lot of trades. I'm not trading 17 times a day. So it's maybe a couple a week is kind of what we're looking at. So it'll be easy to keep track of, I think. And the sizing might start to get larger in terms of what the trade reviews say because of that, but it shouldn't be like drastically larger, but it will likely just be because I'm taking now, we're accounting for like 2 or even maybe 3 accounts at some point. So yeah, some stuff that we're testing that will be worthwhile. I'm honestly just a complete guinea pig when it comes to that stuff, because when it comes to prop firms and all that stuff, I mean, dude, I already got screwed by one, kind of getting screwed by another one, but it comes with the space. Am I like pissed? No, I got a refund on the first one, and the second one, you know, kind of pissed about. It's been like a long time that they've been taking, but you know, whatever, it is what it is. That's just kind of that's the price you have to pay if you don't want to use your own capital, as I've come to find. Hopefully things clean up with the whole, you know, space, but I'm not like pissed like, oh my God, fuck these guys. Like, you know, okay, it is what it is. Now, as long as they do well, they do right on their word and whatever. Cool. They even said, because of the hassle, that I think they're giving a free reset. Now, I thought about this, but I'm not going to be a dumbass. It's not like they're technically giving me the ability to blow one of the accounts and get a free reset. I have never failed a prop firm account yet, I guess, but I've never failed one. I don't plan to fail one, but that made me think, like, because I've been playing like kind of small size. For the way people trade these accounts is like, if they buy one, they you know, if they trade, let's say they trade once a day on average, like you're kind of looking at like 1 or 2 weeks, and like you're either funded or you're not funded. So the sizing is large enough to where like it'll get to your goals, your profit targets, or your stop losses or your stop outs within a week or two. I don't do that. I play a lot more conservative. So my position sizing, because I just don't want to because I know I could go through drawdown where I could have 5 trades in a row that lose. And I just don't want 5 trades in a row to ever run me the risk of losing the account. So I size appropriately to make sure that doesn't happen. So I'd have to lose like 10, 15 in a row or more maybe to lose the account, which then means that I'm not making as much money on the winners as let's say I'm making more in the winners than losers, but that would still mean I have to be up, let's say 10, I have to make essentially 10 trades in a row gets me the targets versus to the profit targets to get funded, versus like 15 or 20 trades in a row losing would get me kicked off. And so obviously you don't win 10 in a row. It's like a game of 3 steps forward, 2 steps back a lot of the time. So it takes a while. So I could size up more of what I'm saying. And I know I have that in my back pocket, but I'm not gonna really do that, because why would I change what's been working, you know? Don't fix what ain't broke, right? But I think we'll be back to trade recaps at some point in the future. We'll see how these trades play out, but at some point in the future, we'll be back to trade recaps. So with that said, what's tomorrow? Tomorrow's Thursday, so we're going to have live trading in the morning. So we'll be back in the morning tomorrow at the open. That's the plan. We actually now have positions to monitor, so that's cool. Haven't had that in a while. So we have that, and then maybe new ones, and we'll kind of go from there. So thanks so much for watching, guys. Hope you have a great rest of your Wednesday. Is today the first day of spring? I think it is, which is awesome. Let's go. Get outside, hopefully, this week or this weekend. And I'll see you tomorrow if you want to. If you can't hang out tomorrow, they'll be back on Friday. Same time, same place, last hour or so of the day for Power Hour Live. Peace.